Welcome to this video. Today we're going to talk about Beyond Meat and we're going to answer the question whether there is a massive move around the corner. We're going to go over the fundamentals and the technicals and we're going to find out whether today is a massive buying opportunity for the long-term investor. So without further ado, let's dive right in. So we're now looking at Beyond Meat on TradingView and we can see the market just opened and it's now trading at $1.22. And we can see here after 1 December, we had this massive green candle of almost 40%. And the price didn't collapse all the way. It actually stabilized. And now it's around the $120, $130 mark. And that's great. We can see that my average cost price is about 170. So I'm still down around 27%. And we can see that the conversion price is $1.75. And this means that this is the price where the creditors have the right to convert their notes into shares. And that creates dilution, but for now, no risk for that. So in this video, we're going to find out if there's still a good possibility that we can have a second wave squeeze like the previous one, and whether this is still a great long-term investment. In order to create a massive short squeeze, we need a lot of people shorting. So here we can see Beyond Meat short interest ratio and short volume. And we can see here the short percentage of float of 25.68%, which is relatively high for a company. But this company has been shorted for a long time. And we can see here that the Beyond percentage of float shorted over time, 2021, 2022, 2023, 2024, and 2025. And we can see it has been shorted always at a very high percentage because people didn't believe in it. And that the stock collapsed over 99%. But recently, we can see that from October 15 it was 30%, 16%, 20%, and 25%. So we can see here that the short percentage of float is increasing, which is interesting because now it's at 25%. Maybe in the next few days it can reach 30%. And that could lead to a short squeeze. We can see here the short interest ratio and it takes 1.5 days to cover, which means that the shorts have 1.5 days to buy everything back. We want this number to be very long because that means that it takes a long time to buy everything back, and then the feedback loop, the positive feedback loop, will be much longer. So if shorts have to buy back their shares to cover their losses, then that creates even higher prices. So if this is like 10 days, that will be amazing. But 1.5 days is not too long, but the increase in short percent of float of interest is definitely interesting. A short percent of float of 25.68% is enough to create a short squeeze. But a short squeeze doesn't just happen. You need a catalyst, something that triggers a short squeeze, because if else this doesn't matter. So the first catalyst could be retail momentum. Beyond Meat became popular because it was a meme stock and a lot of sites like StockTwits or Reddit or X, a lot of people hyping the stock up, which you can see here. If retail traders are going to buy because of these forums and there's a lot of hype behind, that can create sudden buying pressure. And this puts pressure on like these short sellers. And that can lead to a short squeeze where these short sellers have to buy back their shares, and which increases the price even more. In short, meme stock retail momentum could be a potential catalyst for a short squeeze. So in this indicator on StockTwits, we can see this indicates whether most users posting on a symbol stream over last 24 hours are bearish or bullish. And we can see that it's now neutral. If this goes to 100, extremely bullish, that could also trigger the next short squeeze. So the second catalyst could be an increase in open interest on the call options. And this is also the reason in the recent spike on December the 1st. We can see that the open interest is increasing here, plus 2,000, and it's now at 70,000 at a strike price of 1.5. And that means that there were a lot of people buying cheap call options, and the market makers have to buy these shares to cover these positions, and that's create higher prices, and that is called a gamma squeeze, and this can contribute to a potential further short squeeze. A third potential catalyst could be good news or an event that was coming. So here we can see the latest news releases and events. We can see that recently it was the toggle notes, and we can read here that they use 7% convertible senior secured second lien pick toggle notes to 2030. This was their way to clean out their balance sheets, get rid of the remaining debt by finding creditors who will lend them money, and in return they will give the notes. And these notes, the creditors can convert these notes into shares if it's above the conversion price of $1.75. So here in this article, we can read holiday sales to surpass $1 trillion for the first time in 2025. And here we can see the historical holiday sales and 2025 forecast. And we can see that it's increasing each year. That's also why December is often a bullish month. That's why they always say like the Christmas rally. During the Christmas season, people spend more money on food, gifts, and holiday shopping. These months usually make up a big part of yearly retail sales, and they're expected to grow again this year. So if Beyond Meat gets even a small boost in holiday demand, it could help push the stock higher at a time when shorts aren't expecting it. This is also the reason why November and December is usually called the Christmas rally, and stocks are generally speaking bullish in these months. So we're now looking here on the income statement on Guru Focus, and here we can see why Beyond Meat has collapsed so much in the last few years, and that is now only $1.22. And we can see here that the income statement breakdown, this is from 2024, and we can see that the cost of goods sold is extremely high. So this is a low profit margin company. And we can see that the net income is negative. So for each burger they make, they lose money. And we can see that the operating expenses are very high as well. So this company has to focus on reducing the costs of goods sold. They can produce in larger scales to reduce the cost. They have to find a way to reduce the cost of these burgers without reducing the quality, of course. And here we can see that they can also reduce on operating expenses and on staff and on many other things. The company is burning now money, but they have a better cash position now and they have got rid of most of their debt, which is great. And we can see here that like if we look here a few years ago, we can see that the gross profit was much better, but still a negative net income. If they find a way to have higher margins and become even profitable, then this company can really go higher. And that would be great for the long-term investor. I'm very bullish on Beyond Meat, but this is a high-risk, high-reward company because it doesn't have a strong economic moat. It has its strengths like strong early mover brand in plant-based meats and partnership with major retailers and food chains, like for example with Walmart or Hard Rock Cafe recently. They are very good at distributing products and they sell in over 80 countries. And here we can see that there are risks as well. So there's high competition from traditional and alternative protein producers and low switching costs for consumers and retailers, weak economies of scale, and declining demand and brand fatigue in certain key markets. So we're back again on the charts and we can see it's trading at $1.19. I have like a 4% allocation in this company of my portfolio. And if this goes all the way up, it can easily become like 8 or 12 or even much more of my portfolio. And if it goes all the way to 0, I can only lose 4%. And if we only allocate a certain percentage of Beyond Meat, then it's a low risk, high reward setup. I'm risking $1 to make like $10. And we can see here that the conversion price of these creditors is $1.75. I see this as a true value marker. So if we're buying below $1.75, I think you are buying with a margin of safety. So my plan is to hold for at least a few years. I believe long term in the company. I think if they can turn around, then this can be a massive risk reward play. And that will be great for the long-term investors. I think there could be a potential second wave squeeze, but not as big as this one. But if this positive bullish momentum keeps coming from retail, then this stock can definitely be higher. And if the fundamentals even become better, we can definitely see higher prices in the near future. I also think that during the Christmas rally, we can see higher prices because of more spending during the Christmas season. And that's also for foods. Of course, always do your own research. This is just for educational purposes. Feel free to like and subscribe for more videos, and I'll see you in the next one.